Hi, this is Francine. Thank you for taking the time to watch this video. Today, I will discuss how to qualify for hard money. Before I forget, if you find this video helpful, please give us a thumbs up and subscribe to our channel. This will help us to grow and be able to share more info on real estate funding, BRRR strategies, as well as other real estate resources. Disclaimer: this presentation in no way guarantees an approval of any loan product. This presentation is for information only. All potential borrowers will need to complete a full application, credit and background check, provide necessary documents, appraisal, and subject to underwriter's approval. All loans are commercial, non-owner occupied for small business owners, i.e. LLC, LLP, or incorporated, to use for business purpose only. What is hard money? A hard money loan is an asset-based loan secured by residential or commercial real estate. It is faster and streamlined approach compared to conventional financing. These loans require little documents and close within 30 days or less. Why do so many investors use it? Well, for the reasoning that I just gave, it's just a faster process for real estate investors. If you're under the gun or if you're trying to make an attractive offer in this competitive real estate market, being able to close on time or close within 30 days or less is ideal. So that's another reason why real estate investors tend to use this particular loan product. The process is streamlined, meaning that you don't have to show so many documents like pay stubs, W-2s, tax returns, and things like that. You're not being analyzed by the loan to debt ratio. It's really asset-based. And also, if you have, like, let's say, for example, $200,000, instead of you buying one real estate property and waiting for it to be completely rehabbed, put on the market, sold, and then to start that whole process all over again, you can leverage that $200,000, and now instead of you buying one property at a time, you could possibly buy 2 to 3 properties depending on the market area, and be able to either do flips, 1 or 2 flips per month, or be able to buy 1 or 2 rental properties a month now with leveraging with hard money or private money. So this is the other attractive reason why so many real estate investors are taking this route versus the conventional approach. What are the popular loan products for investors and flippers? Well, there are 5. The first one is the fix and flip. The second is bridge or short-term loan, rental loan or AKA buy and hold, multifamily or commercial, and multifamily is anything that's 5 units or more. And then the commercial is retail or mixed use, where you have retail at the bottom and multifamily up top, or retail in an office building or a warehouse. And then the latest product inside the hard money, private money world is called the ground up. And we're going to go into details about each loan product as well as what are the requirements for them. Fix and flip. So with a fix and flip, basically this loan product is very easy to get started for brand new investors or experienced investors. With a brand new investor, we can fund up to 80% of the purchase price and 100% of the rehab costs, up to 70% of the ARV. And the ARV is the after repair value. If you're an experienced investor, meaning that you've done at least 3 fix and flips or 3 rental properties or the combo of the 2, then we can fund up to 90% of the purchase price and 100% of the rehab costs, up to 75% of the ARV. This is a short-term loan, 12 months, interest only. You need to have at least a 680 FICO score or higher. Sometimes we can make exceptions with a 650 to a 679 FICO on a case-by-case basis. The documents that are needed are at least 2 months bank statements showing that you have the down payment as well as the closing costs and reserves, the LLC or the corporation documents, and that also would include your EIN letter, which is like your IRS letter, as well as your operating agreement. We will also need to do an appraisal. So we would need an appraisal report that includes an as-is value as well as an ARV value. We would also need to see the rehab budget or the scope of work, and that should be an itemized spreadsheet listing all of the items that you plan on repairing in the property, all items that you feel that will add value to the property, that will increase the property's value, as well as we would need a title search. Again, all loans are subject to an underwriter approval. For the bridge or short-term loan, you need to have at least a 650 FICO score or higher. Brand new investors are required to put 25 to 30% down payment, depending on their credit score. And for experienced investors, it's 25% down payment. There's no lease that is required with this particular loan product. The documents that will be needed are the bank statements showing the down payment, closing costs, and reserves, the LLC or corporation documents, appraisal report for the as-is value, as well as the title search. All loans are subject to underwriter approval. The bridge loan can be anywhere from 12 months to 24 months. So again, this is a short-term loan, and it's also interest only. The rental loans, or AKA buy and hold, this is very popular in the BRR strategy. Basically, these are investment properties that you want to hold on to longer than 2 years, and you want a fully amortized loan. So the rental loans would fit that bill. So with that, this is more FICO score and rental income driven. No experience is required. So at least a 680 FICO score or higher is needed. We can fund up to 80% of the purchase price. Or if this is a refi, we can go up to 80% of the loan to value. Or if this is a refi cash out, then we can go up to 75% of the 75% of the as-is value. A lease is required within 60 to 90 days of closing. We would also need to see the bank statements showing the down payment, closing costs, and reserves, the LLC or corporation documents, an appraisal report for the as-is value, as well as a title search. All loans are subject to underwriter approval. So this is a popular loan for investors that want to hold on to it. And in regard to that lease, I just want to reiterate that it's you need to provide it anywhere from 60 to 90 days after closing. But if there's already a tenant in there, then we would need to see that lease as well. And the reason why I say that the rental income is very important is because that will determine how much of a loan that we can give on that particular property, because we want to make sure that there's a positive cash flow going on. So we're looking at the rental income, we're looking at the taxes on the property, as well as the insurance on the property, and if there's any HOA or any maintenance required, that also gets factored in when we look at the rental income. For the ground up, or the AKA construction loan, this loan requires you to have a minimum of 680 FICO score or higher. We require that you be experienced with doing expansions or building from scratch, and you need to provide documented proof that you've done at least 2 or more. This loan product is really geared towards general contractors or experienced developers who have done this before. We would provide up to 75% of the purchase price, up to 100% of the rehab costs, up to 75% of the ARV. Again, we would need to see 2 months bank statements showing the down payments, closing costs, and reserves. The reserves is going to be at least 1 year's worth of reserve we need to see. So when we say 1 year reserves, we're looking at the interest-only payments. We want to make sure that you have the payments to cover this, because when you're building from scratch, it's very extensive, where you have to get an architect opinion, you have to get drawings, you have to get approval with zoning, you have to get permits, and you have to constantly follow up to make sure that the permits are closed. So because this process is so extensive, this is why it's meant only for experienced developers, as well as general contractors who've had experience doing these type of products, because it's so extensive. With this, we will also need to see a title search, as well as do an appraisal report for the as-is of the land value, as well as the ARV when it's all said and done. And again, all loans are subject to an underwriter approval. So let's get you started. If you have any questions, or maybe you have a property that you would like to make an offer on, please feel free to come to our website, Quick Real Estate Funding. Again, quickrealestatefunding.com. And you're able to get a free quote. So we'll tell you how much it's going to cost, all of your closing costs, as well as break down your payments and let you know the interest rate on it. Or, as I mentioned before, if you need to submit an offer, again, just fill out the questionnaire on the website and we'll be able to get you a pre-approval in the same day. So again, the website is www.quickrealestatefunding.com. And if you have any questions or want to email us anything or loan scenario, please feel free to email us at info@quickrealestatefunding.com. And my name is Francine. And if you like this video or found this video to be very helpful, please like the video as well as subscribe to our channel. And thank you for taking the time to hear our presentation.